not millions, it's billions.
Annually,
Yeah.
that Kiwis are buying and selling.
In crypto space.
Do you guys see any political parties trying to understand this area better?
Not really. You're seeing retirement funds get some exposure to it. You're seeing some companies who are literally defining their business around owning Bitcoin, and more companies are starting to adopt that. I think we've got some fantastic founders who are driving change. We just need more and more of them rather than selling houses to each other.
Bitcoin has once again reached all-time highs, and perfect timing to have Paul from Easy Crypto come in and talk to us all about it and what's happening in the crypto space. Good to see you again, mate. Thanks for coming in.
Oh, you're welcome. Thanks for having me back. It's been, it was July last year, I think we met last time. Yeah,
the
cool.
years just fly by. It's quite
does.
scary,
Yeah. It's been busy.
So I bet. Bitcoin recently, I saw 110,000 US.
Yeah, over the week, it was very exciting in our office, I tell you.
Yeah. A lot of believers in Bitcoin and holders of Bitcoin, or does it just mean that sort of transaction volumes and stuff increase?
Bit of both. You know, there's people who've been in it a long time and celebrate those big milestones, and then there's people who kind of hear about the milestones and think, oh, maybe I should get some exposure and come on in. So generally speaking, it's been good for business. So
I feel like last time we talked, it was kind of like Bitcoin's here. It's arrived. Maybe it's not going anywhere. What is this? More and more people being curious about it. And then I feel like it's sort of, I think it had its $100,000 moment maybe, and then sort of dropped back from there. And then it sort of just rumbles along in the background. I think it takes a high for people to sort of go, oh, that thing again, okay.
Yeah.
Is that what you guys see internally?
Yeah, like I think we put out some comms about this recently. It's becoming almost a bit mainstream, like a little bit normalized, and don't want to use the word boring, but it's becoming like that. And so, we see a lion's share of New Zealand's volume, and we're seeing, healthy people, new user sign-ups and all that sort of stuff. So there's still interest in people from people who haven't had any kind of Bitcoin or crypto exposure, but there's still this healthy cohort that have been in it since, whenever they got in, and continue to ride the waves up and down as they do go.
And they'll be sitting on some serious unrealized losses if they haven't sold.
Well, there's also some gains. Depends when you get in.
Sorry.
Yeah. So it kind of depends a little bit, but there is, if somebody got in 2013, there are some people like in New Zealand like that. I think they're doing pretty well.
Yeah, I was meant to say that because once it goes to an all-time high, effectively nobody has lost any money, right? Unless you've literally bought it at that top. But I think there was a little bit of buying going on at 100 and whatnot. Then it dropped down and people were going like, oh, I've timed this. And then I think people stopped paying attention, but some of them might be surprised to see that it's bounced back as well. Yeah,
probably worth logging into your trading app and having a look at where you're at. So, yeah.
I noticed that some of the share platforms that facilitate buying and selling, they said that during that real heavy market volatility post-tariffs and whatnot, that some of their transactions and sign-ups had never been higher. Do you guys see that? Like, is there anything that stands out where people sort of rush to become an Easy Crypto customer?
Yeah, like I think there are strong parallels to whatever share trading platform, whether it's Shares is Hatch or whatever. I think there's that sort of stuff. I think the worst thing for a business like ours is just flat.
Yeah.
News drives volatility, and volatility drives volume, I think, is what they're kind of saying. And we're quite similar in that regard. If it's just trundling along, doing whatever it's doing, then people don't tend to pay as much attention to the market. They do like it moving one way or the other, and then they can play longs or shorts or whatever they're doing in their trading strategies. So, yeah.
What do you reckon the split would be between the customer base that are just sort of buying and dollar cost averaging in and treating it like any form of investment long term versus sort of people who are, they're looking for the speculative stuff and they are diving in and out at different prices?
It's a great question. We've got a dollar cost averaging feature on our platform. That, I think I've looked at that. That's sort of around 10 to 15% of the base. And those people aren't, it's not exclusive. They're probably dollar cost averaging and riding waves as well. So, long-term holders, really hard to measure because, again, even within crypto, it's just not just one thing. So they might be long-term holders on, say, an asset like Bitcoin or Ethereum, as well as having a small portion that they're speculating on. And we just don't have that kind of granularity in our data to kind of say, the one or the other. But, in crypto, a traditional portfolio would be to have something like Bitcoin or Ethereum or whatever it is that you're wedded to, and you hold that for a long time. And then you do have a portion that you would, splurge on the more speculative stuff as well.
Yeah, got you. So what, I guess, so for those who maybe don't know about Easy Crypto, and you can add to this, but how I would explain it to keep it really simple and was taught to me is it's an on and an off ramp. So if you need to get on the crypto highway, then you can use Easy Crypto. And then if you're on the highway and you've got some crypto and you want to sell it, then you can use Easy Crypto to get off. So you can buy and sell, and that's sort of the basic starting point, but you guys do a lot more than that, right?
Yeah, look, that's fair though. So we're work really hard and maintain good banking relationships, and so we're able to turn crypto into New Zealand dollars if you want to sell, or New Zealand dollars into crypto if you want to buy and do that. We also have a swaps feature on the platform, so if you own some crypto, say you've got some Solana or Bitcoin and you want to swap it for something else, you can do that amongst our assets as well. So, but yeah, that's the basics. That's where we came from, was an on-off ramp.
Yeah, got you. Okay, so say just on that I've got, use your example, Bitcoin and Solana in my wallet, some form of wallet, and I want to swap them. How do I use you rather than using the wallet, or just maybe the wallet doesn't offer it?
So the way it works is you send us the coin you want to sell. So say you want to sell Bitcoin for Solana, you send us some Bitcoin. When that arrives, we'll convert that and send you back the Solana into your wallet. And so
gotcha.
that's how that works.
Okay. So
there is a little bit of transactions involved, but that's how that feature works.
And you guys make money on the fees, basically?
Yeah.
Gotcha.
So we're a broker, so we take a small cut on every transaction.
And if I saw one stage, if you're doing high volumes, you potentially get preferential rates. So like if you are having a big nudge at this, you probably want to be reaching out directly to you guys.
Yeah, that's right. The original conception when Janine and Alan set it up was called Mates Rates. We've rebranded it since, but it basically, it's a thank you for continuing to drive volume, and there are some tiers in there. And so if you spend up to $10,000 lifetime value with us, you'll get one break, and then 50 grand and 100 grand, and there's limits in there. And I know those sound like big numbers, but people quite quickly get there as well. So it's an interesting part of the ecosystem.
Yeah, I was going to ask, like, what sort of volumes, or if you can put it into dollar values to help people understand, like, how much are you guys on and off ramping every sort of week?
Oh, every week.
Or what what you track, whether it's monthly?
Not sure I can share that. But it's significant. Like I think people would be surprised at the scale of the industry in the New Zealand context. Whether it's us, doing the on ramping, or other trading businesses, I think they'd be genuinely surprised. It's not millions, it's billions.
Billions, annually, that Kiwis are buying and selling
in crypto space. Yeah, definitely billions,
and hundreds of thousands of Kiwis to be able to do that.
Yeah, I mean, we've got some data. Inland Revenues put out some stuff. We think it's sort of 10 to 12. Maybe a little bit more now, percent of the population. So that's over 500,000 people, with some who either have or have had crypto. Inland Revenue, I think they said, in a calendar year, there was over 250,000 people, something like that, who had transactions that, they were tracking.
Oh, yeah.
And you could read into that whatever you want. And, it was a big number. So, there's enough evidence out there to support it's not just a cottage industry. It's quite big.
And, I think something to point out on that, like, this is a pretty technical space in tax terms for people, because if you buy and sell at a profit, you're probably going to get taxed at your marginal tax rate. Now, if you're staking and then getting something back, you're probably going to get taxed on that too. It seems like everywhere you look, crypto is taxed. And I think that's what makes it a little bit complicated for people, even who want to invest. So going back to your example, I swapped some Ethereum to Solana, but because that's effectively a buy and a sell, I trigger the tax rules.
Correct.
So I've then got to calculate, okay, like which or what of my Ethereum that I had and that I dollar cost averaged into did I let go of, and what was my sell price to then work out, is this profitable?
Yeah.
And then to now hold my new crypto asset of Solana. So I'm a chartered accountant, and I'm not doing that. That's too hard. So I've had to outsource it and pay for some advice.
Yeah, and look, my advice to people out there is there are plenty of apps out there who do this for you, who can watch your wallets and make the calculations around, where the profit or loss, because you can claim losses as well, happens. And it is not a simple space. And so do get some help with either through, local accountants or, online accounting tax platforms, Coinly and Crypto Tax Calculator, and all sorts of players out there doing that.
Because the risk is that, well, people assume that, the IRD will never know, but it's very easy for them to know, right? Because they can just come to you guys as an example and say, hey, and I think they've done this in the past and we've talked about it, they say, hey, we want the data of people who have been buying and selling. Is that right?
Correct. And,
Yeah.
you know, as a business in New Zealand, when they turn up and ask for data, there's not much recourse. You know, you have to give them that sort of stuff. And so, you know, we've been public about it, that they've made requests, and I'm expecting that will continue in the future.
Well, on that, I think I was reading recently that there's a reporting framework that's changed that now says that regularly crypto transactors and operators need to report to the IRD. Is that right? I had exposure to that.
That's something that's coming. It's called CAF, Crypto Asset Reporting Framework, and it's come out of, you know, one of the big global bodies. And I think the way I would describe it is it's a standardized framework where local tax authorities are capturing all the crypto transactions.
Yeah.
And I suspect that means that inter-agency collaboration will mean, you know, the ability to create opportunities outside of your tax jurisdiction are going to get limited.
Yeah, gotcha.
I think is how I would think about that.
Yeah.
And I think from memory, like we have to start the process in 2026, and then, you know, 2027, the first tranche of data will need to be provided and all that sort of stuff. And what it will mean for you as a user is, when you join up to, you know, various financial services, one of the things that you get asked is, what's your IRD number? I suspect, you know, crypto is going to become a lot more like a standard financial service in that regard, and that kind of information will need to be gathered and provided to the right authorities.
Yeah, I think it's probably hard for people to understand. It's like, it's almost like the crypto's being attacked, right? But I dug out an article from years ago. I can't remember what year it was. It was either I think it was like 2015, but TradeMe were asked to hand over all of their data. And I remember actually when I was at uni, like my mate that I flattered with got a letter from the IRD basically saying, like, we know you've got a lot of activity on TradeMe. Are you declaring these profits? And he was importing things and selling them,
Right.
just like people do in this day and age.
Yep.
We were just pretty early to the venture. And, you know, I think TradeMe pushed back a little bit on the data that was requested to start with, and then eventually had to hand it over. So this is nothing new. And even, you know, for people to understand, remember years ago, the IRD didn't used to get your interest data from the bank. So they didn't really know, like, how much interest you had. But now, you know, you go into your My IR and you see, okay, Westpac have paid me 33 cents and they've already passed on 11 cents for tax or whatnot. It's just basically like done for you. But many years ago, like, you would have to key in that data, and just constantly with technology, these systems are evolving. So I think for people to assume that they can dodge tax, like, they're going to get a big fright at some stage.
Yeah, I think that's fair. I think one of the interesting questions going forward, though, is if I've got a AI doing stuff for me, is it me? Is it the AI? Who gets taxed on that regard? Like, that's a cool question to answer.
Yeah.
But I think your description of the transition that we've gone through in our tax system is very fair, and I think, you know, we've always been really transparent about the fact that if you're going to be an active participant in the ecosystem, you have to abide by the rules, and the rules are you pay your tax. Yeah. And then we have, you know, roads, hospitals, schools, all that sort of stuff.
Yeah, well, people probably get a little bit, frustrated by conversations around tax when they see that, perceive that, you know, other people can invest in different assets and not have to pay tax on those. So I guess there's a big part of the Bitcoin community, right, who believe that debt is impacting the world and money is being ruined in terms of value, currencies are being debased and all these sorts of things. Therefore, my way out of that is to invest into an asset that's going to hold its value. Now, traditionally, that's exactly what Kiwi people have done without understanding that side of it. They just have been taught the sooner you get on the property ladder, the better, which for a lot of people is basically to protect yourself from the erosion of the value of money, and hopefully your property protects you.
Yep.
Now, Bitcoin people believe the same sort of thing. Unfortunately for Bitcoin people, if they then go to sell some of their crypto, they're going to get taxed at their marginal tax rate and lose 33 or 30 or 39% of those gains. So I can see where the frustration comes from. I do wonder, you know, do you guys see any political parties trying to understand this area better?
Not really. Like around election time, there was a bit more interest. I'm also on the Blockchain New Zealand Council, and so we did meet with some of the major parties, and they were seeking to understand blockchain and Web3 and, you know, all that sort of stuff. But I don't think in New Zealand, it's become an election issue like it did in the US. Like it was a big deal in the US.
Oh, was it? Yeah. Oh, of course. Yeah.
Yeah, I mean, something, you ended up having, the Democrats, the Biden administration, kind of offsiding something like 25-30% of the population who own crypto the way they were going after it, and it became an election issue.
Yeah.
And so for us, that's the future. Eventually we'll get there, but not right now.
Well, I suppose it just takes more and more people to be intrigued by this or have a different view of it than what the current tax rules do, and then there starts to become a bit of pushback back, right?
Yeah.
One of my goals is to help 100,000 Kiwis improve their financial literacy and in turn help create a better New Zealand. Generate has a very similar goal to educate and empower Kiwis to make smart KiwiSaver decisions so more of us can be better off at retirement. That's why I'm stoked to have them on board as sponsors. Together, we can reach more people and make this goal a reality. If you've never got KiwiSaver advice before, book a no obligation chat with a Generate advisor at generatekiwisaver.co.nz/change. They'll even put you in the draw to win 5K worth of vouchers just for having a chat, whether or not you decide to sign up. T's and C's on that webpage. A copy of the product disclosure statement is available at generatekiwisaver.co.nz. The issuer of the scheme is Generate Investment Management Limited, and of course, past performance does not guarantee future returns.
It's interesting, we've only taken probably 12 minutes to talk about AI. I asked AI to skim the 2025 budget and tell me what was in there specifically around AI or the mention of, and it was basically like, well, no, there's nothing in
Silent.
there.
Yeah.
Which is interesting, right? Because given that all politicians seem to tell us about the lack of productivity and technology and adoption of technology and how we need to be more efficient and whatnot, and AI is here as potentially one of the largest transformations of how the world is going to work going forward, and we put a budget on the table and basically like, it doesn't even acknowledge it. So we go a whole nother year before anything specific about that. Obviously, don't even know if that's got anything to do with crypto, but I think sometimes with the politicians and tax rules, they're so far behind what people are doing on the ground and what they're thinking about. I heard a politician recently talking about AI, and what I took from it is that they haven't even tried to use ChatGPT. They sort of said, well, yeah, we all use AI as sort of part of our daily life. And I'm like, that's very different to seeking out technology to use it. And I wonder, as we get maybe some younger people coming through the political system or a bit of a turning away from housing and more exposure to crypto, whether it just takes loud enough voices to do some tapping on the shoulder of some of these politicians to go, hey, like these rules don't stack up, or like, why don't you understand what's going on over here? But it sounds like that's not happening yet.
Not to the extent that we'd like. I think, the Web3 community and Blockchain New Zealand are certainly trying, but we just haven't got there yet. And that's it's a yet moment.
Yeah.
And our job is to have more people in New Zealand having crypto to make that a more relevant topic, I think. And, it's a big thing doing the budget, but, my personal view wasn't particularly visionary. I've got children. That's a little disappointing for the future of New Zealand, I guess, was kind of my walk-away moment.
Yeah.
I can understand why more and more of the younger people are thinking New Zealand's not for me, which is really sad, right? Because we've educated them, we've raised them in a great place, and then they're feeling like there's no opportunities here. And I think that's a big failure. That's a sad failure for the future of the country, I guess is my take on that.
Yeah.
And it, it doesn't have to be crypto, it doesn't have to be AI, but I do think we need to lead ourselves out of a commodity-based economy, I guess is my language. Stop exporting stuff that people sell back to us at a higher value. That doesn't make sense. We need to be in that space.
Well, someone like Janine, and I've never met Janine, nor do I know too much about her, but she was one of the founders of Easy Crypto, right? Yep. So she's obviously a visionary to sort of see something happening in this space and go, okay, we can build here. And now I believe that the business has been sold in its entirety, or
yeah. So the whole thing. So correct. Janine and her brother Alan founded the company late 2017, and another 8-year overnight success story.
Yeah.
And then we were recently purchased by an Australian company called SwiftX, which has had a presence in New Zealand, and so there was a really nice synergy. The genesis stories between the two companies are almost identical. Two guys over there, two people here, both saw the price of crypto being really expensive in the local market and wanted to solve that problem. SwiftX is the number 2 exchange in the Australian market and growing really well and has a really cool set of products. And they're very keen that when the time's right, we're going to launch that into the New Zealand market and take it from there. So it's pretty exciting times for us as a business. It's a bit sad to see Janine gone. She's still around in the business, but not nearly to the same extent. But she will, she's got us to where we've gotten to, and the next stage is going to be an exciting journey with the new owners.
And if she doesn't start Easy Crypto, how many people are employed there now?
55, 60, around the world.
Job creation,
all that
internationally, gives people exposure to things that they maybe could not have accessed before. There's a whole heap of education that goes along with it.
Yeah.
And that's just skimming the surface. And then you've got a global company that comes along and goes, hey, we would like to buy that. So I think we need to tell more of those stories to show people there still is opportunity, and that's probably, I feel like the country's struggling to do that a little bit. And it's like, let's just stay on the same path. But there are so many things that we can all be doing individually, or even then to get going on the journey and then take other people with us that can be life changing.
Yeah, look, I agree, and founders are immensely brave people. Like they're the ones that have to believe the most in what they're doing, and we kind of need to revere them because they're so brave, but they're the ones who make change. The Rod Drurys, the Vaughan Fergusons. There's a guy making drones out of Napier. I never heard of him, but it's so cool, right? Because it's clearly, you look what's going on around the world. It's clearly part of the future in terms of what's going on in warfare and all sorts of other things, deliveries. There's people experimenting. So I think we've got some fantastic founders who are driving change. We just need more and more of them. We've got to excite the market towards that stuff rather than selling houses to each other because what does that do?
Well, we can see we've got the country we have now.
Exactly.
Yeah.
So,
yeah, it is. I think the younger generation are coming through. Some of those that are a bit more entrepreneurial or a bit more, they've learnt resourcefulness. And I think even some of them are going, oh, you know what, I can get into a established industry or a boring industry, and I get to speak to a few of them on this podcast where they see it, they go in, they disrupt it, and then they hire their mates and they do things differently and kind of level the standard up of what should be expected in that industry. I think that's pretty cool as well, where it's not like, okay, you've got to build this unicorn thing and come up with an idea and be a Janine. As amazing as that is, like not everybody can be a Janine, right? But a lot of these people are realizing, oh, I could do that. I could clean cars, or I could go out and do home maintenance, or I could do building and I could do it differently. And then they sort of take, like I said before, people on the journey, but their skill set into it and change the way that it's done.
Yeah, and I think that is the future. It's really hard to create those brand new industries. You think about. So, I was had the pleasure of being in San Francisco about 3 weeks ago, and I spoke to a New Zealander doing some really cool stuff about AI. And the way he said, get in a Waymo. And if you don't know what a Waymo is, it's a Uber without a driver. It's literally, the future. And he said, you have to do that because in my life, there's been 3 profound things where at the moment I've seen it, I'm like, that's going to change the world. The first for him was the iPhone. The second was when he started playing around with ChatGPT. And the third was these Waymos. So he's like, you got to do it. And the point of that is, it's still a cab. But it's a foundational evolution. And so I think, taking that forward is the right way to do it. And technologies like AI is what they're doing is they're meaning that companies who are embracing them are able now to service more people at a lower cost.
Yeah.
So, before when you looked at, your cost of acquisition or whatever your metric was and go, I can't really reach the next group of people, AI is lowering that. They're making, coding cheaper. They're making marketing cheaper. They're making all of that stuff cheaper. And what that does is it means you can reach more people who probably are in different countries who couldn't afford $10 New Zealand because that's a lot of money to those countries. But if they can get it for $5 New Zealand, they're in. And so that's the power of this kind of world that we're starting to enter into. And people who embrace these technologies and adopt them and realize what they are in terms of, efficiency drivers, are they revolutionary? They're basically software coding. If you're using Cursor, it's doing, the basics of software coding, but you still need some intellect. It's just making some of those more tedious parts really, really efficient.
Yeah.
And that's parking that and moving on is kind of the bit that's making these companies stand out. And, I was at this conference, there was some, Mark Zuckerberg and a few other people were speaking. And Mark, you listen to Mark Zuckerberg speak, he's going, we've got 3 billion of the world's 9 billion people. Now I can reach another billion people with this technology. And you're like they're just seeing opportunity and excitement and all that sort of stuff. And I don't hear a lot of people in New Zealand talking that way.
No.
Outside of a select few in these little niche groups who are positive by nature in the tech space, because it's mainly technology driven at the minute.
Yeah.
And are looking outside of what's going on here in terms of when will the housing market turn around? Like when will the market? It's kind of like
who cares?
Sadly, that's going to mean a lot to the boomer generation. It's not going to mean a lot to the next generation because they already haven't got a house because they can't afford. Was it $950? Still average price for a house. If you're 18, 20 years old, that's way beyond you. So they're looking at other investment opportunities, things that they still want financial freedom, but they're not looking at a house anymore because that's priced out. They're done with that. That belongs to the past. And so they're looking at the future. And crypto is part of that, but they're also looking at other alternative investment vehicles. And our research is really clear. Like they have a small amount of discretionary income, just like every 20-year-old in every generation, but they are looking to the future and looking for investments.
The interesting thing is that, if you, on the AI piece, rehousing, if you think about it, I've had some younger people saying to me recently, robots could take jobs and whatnot. And I'm like, yeah, but people have to be able to afford the robots to start with. The businesses have to be able to afford them. They need to be trained, whatnot. So I'm like, okay, yes, but just don't freak out too quickly. But I said, just think through this. If all of a sudden you are right and we have all these robots and they can do stuff, what's one problem they're probably going to solve in New Zealand? Well, the biggest problem that Kiwis seem to agree on or believe is true is that we don't have enough houses. Well, if they go and build 200,000 homes because you don't need labour inputs and whatnot and we just make it very modular and it can all be designed, shipped in, bang, and popped up, well, what's going to happen to the value of your property?
Yep.
So, but no one's talking about that. It's oh, okay. But I think, even reviewing my own output, I've been thinking about this over the last couple of weeks, now that I've used AI more, it has just skyrocketed. And I would say, I don't want to use the word skyrocketed, but if I'm honest about it, it actually has, because it's taken so many of my thought processes and it's helped me finish them. And it's removed barriers. And I guess a good example is I'm now having people regularly search for my name directly, right? And I've got this old website that I'd set up and it was just sort of like a landing page. And I said to my team of people, I'm like, okay, we need to refresh this up and let's spend a bit of money and just get it a bit 2025 and sexy it up. And they said, well, why don't we get a video across it? You've got so much video content. I'm like, okay, that's cool. So I say to another team member, hey mate, can you put something together? I'm like, I'm not going to brief it, just come up with whatever you like. So there's no friction and no speed. And it's oh shit, we probably need a voiceover. And that would be, my brain's like, oh, well, how do we get someone to voice it over? What does that cost? Who does that? And normally that's where I'd go to LinkedIn or somewhere and be like, hey, does anybody know someone who could? And I would use my network to solve it. Now it's gone well, why don't we just there must be an AI feature. And then one of the people on the team is like, oh yeah, actually I've been training AI on my voice. If you give me the script, I can voice it over. So that's...
Then you go, review this video, give me a voiceover script. There it is.
Yeah.
It's like that, right? I don't watch. I used to watch, YouTube's maybe 2 or 3 times a week or on market. I'm like, I don't do that now. I'm like, summarize this, put that into an AI, bump,
nice.
top 5 points, because I just saved myself 45 minutes.
Yeah. It's phenomenal how much data it can process, and I think people probably saw the hype and played with it. Probably much like crypto, it takes it to get heaps of exposure, or Bitcoin going to all-time highs or whatnot, or someone saying that your XRP's gone up 10x or whatever, and all of a sudden it's like, what's that? One of the questions I had yesterday was, is it too late to buy Bitcoin? And I think a question like that, we both smile because it's like, that's not the right question to ask, but how do you explain to someone what they're trying to ask? They're trying to ask, have I missed the increase, or, how much is it going to go up from here? And am I going to regret not buying it? Basically, is sort of what they're trying to say. And it's like, we both don't know that, but you've got to then go and find that answer yourself. But if you get stuck at the, is it too late? Well, but it's funny how we never say that about property. It's like, it's never too late. Best time was yesterday. Second best time is today. So, yeah.
Except for those people who bought 2 years ago.
21.
Yeah.
Sorry to all of you guys. We feel for you.
Yeah,
It'll
we do.
hopefully bounce back, but we've taught you how to,
diversify.
Yeah, 100%. All right. So we got lost on a couple of tangents there. I guess briefly, there's a big difference between crypto and Bitcoin, right?
Yep.
Yeah. Do you just want to unpack that a little bit for maybe those who don't sort of understand it as much, or maybe, with some then data, what's the difference between the Bitcoin purchasing that you see through the platform versus everything else?
Yeah, okay. So there are a lot of different cryptocurrencies, probably millions now, actually, but they're not all the same. Some of them are built to do various different things. And so some of the ones that you've talked about today, I'll just touch on. So Bitcoin was the first one that came out. It has this role as kind of a store of value, and I can talk to how that works, actually, because some people laugh because it's too volatile, but I'll explain that. Then after that, there was some generation 2 technologies that came out. So Bitcoin was generation 1, the generation 2, or people doing different things. And so you talked about XRP. XRP came out, and that was kind of a payment tech. It was designed to take on Swift and be adopted by banks. And then we've got Ethereum, which I've talked about, which is the kind of like the platform that a lot of smart contracts and tokens are built on. Not exclusively. It's had some challenges. Solana is a challenger to that, and just a better, faster, cheaper network and that sort of stuff. So again, you have to do some research. Don't just come to me and go, what should I buy? You're like, well, what is your risk appetite? What are you trying to achieve? What are you trying to do? And we've got a big part of our website called, the Hub, which is basically a learn site. Put in some search terms and do some research. If you're old-fashioned, Google it. If you're new-fashioned, Perplexity it and do some research, right? Tell me about Bitcoin. Why does it do what it does? That sort of stuff.
Yeah. You
should feel comfortable with what you're buying and understand its own rhythm and trajectory. Bitcoin is the biggest coin by miles. It has this thing they actually measure. It's called Bitcoin dominance. I think it's over 55% of the total crypto market, so it's a big part of the crypto market. And what that means is when it moves, it generally moves the entire market. So when Bitcoin's having a good day, the entire market feels lively. And when it's having a bad day, the entire market, feels a bit subdued and all that sort of stuff. Like I said early on, even in crypto, you can have and this is their world. The FMA would probably be upset with this language, but you can have a lower risk position, which is predominantly Bitcoin or Ethereum aligned, and some really speculative stuff on the other end, or you can have a more balanced portfolio. And people, get wedded to technologies and narratives that exist on different coins. The XRP group have an XRP army who have been rapidly supporting it since its launch, maybe 2016, and there's trends, there's tribes that support coins and tokens and technology that sit behind this stuff. And sometimes they're able to move the price as well. And so if you're getting into those things, you probably should understand, just posting on, and I see it on, people post on Facebook, should I buy some XRP? It's like, why are you even asking that to this group of people? Because the XRP army is always going to say yes. Everyone else who hates XRP is going to go, no, buy whatever. You need to understand what it does. Do you think its fundamentals are going to go up or down? Has it got a good use case? Does it have a good legal history? What's going on in that space that can drive the price? Those are the kind of things that I would be looking for, right? Yeah. And not jumping onto the latest speculation because, you saw it on Facebook, for instance. So, it's not it is an investment class that's got some unique characteristics to it, but it is, the fundamentals of do your own research, understand the fundamentals of where the coin's going and how they work. Bitcoin has a finite supply eventually. It's still issuing coins, but it will get to 21 million, and the software says at the moment no more than 21 million coins. So if you've got buying demand and only a fixed supply, what does that mean? Well, supply and demand dynamics push asset prices up.
And we're starting to see more demand at a treasury level, so that's some corporate term, but basically more than just retail people buying this, right? So you're seeing states in America different countries, rumours being that they're going to buy it as a hedge against inflation, as a store of value and a strategic reserve, I guess, to use different terminologies.
Yeah, it all means the same stuff, right? And it's all over the world. You've got Abu Dhabi. So if you own the ETFs and and they're issued in the US, every quarter they put out who the owner is. It's called I think it's an S13 filing. And so every quarter we get great insight into who owns the Bitcoin effectively. Abu Dhabi, sovereign, one of the, got a bit of money lying around, 400 million this time. It's not world ending, but they've still got a big number. You're seeing, sovereign retirement funds get some exposure to it, in small amounts by percentage wise, but they're starting to get in. And so your point around institutional adoption at both a treasury level is there. You're seeing some companies who are literally defining their business around owning Bitcoin, and you talked about strategy, or formerly MicroStrategy. That's all he does. He issues debt and buys Bitcoin. Bitcoin goes up, he looks like a hero. That's their business model in a nutshell. And he's been doing it so long that he's kind of dollar cost averaged into a point now where he's doing pretty well in terms of Bitcoin price. Pretty brave when he started doing it. Looks like a genius now. Those are the things. And so more and more companies are starting to adopt that. I'm not aware of anyone in New Zealand who's definitively said we're going to put Bitcoin into our corporate treasury, but I do know some businesses that have been accepting payment in Bitcoin for a long time.
Yeah.
And I do believe they're still hanging on to it. So in a way they've done that. And it's just, there's a lot of belief in that when they started doing it, but now it's, the success metric is look what's happened over a long period of time. And I guess my guidance to everybody in investing is, if you buy the right, good quality assets, generally speaking, over time, enough time, they will go up. And I said I was going to talk about Bitcoin as a store of value, because people laugh, it's too volatile for that. If you go to trusted sources like Google Finance or whatever it is, and you put in the price of Bitcoin for the last year, it's up 50%. New Zealand dollar's down 3%. The Australian dollar's down 4%. If you're holding dollars against the US dollar, you're in decline against the US dollar. And then you start getting into more, volatile currencies. The Turkish lira is down like 38% against the US dollar. So if you're holding Bitcoin versus Turkish lira, you're up against the dollar 50% plus that 30% gain. Right? It's pretty strong. It's pretty compelling. And there are, stablecoins and all sorts of things, but that's why you see adoption in these real big pockets as well, because as wild as Bitcoin can be for stable economies like us, if you are in those places, it's a godsend.
Yeah,
right?
I was just thinking, if I lived in Turkey, it'd be very hard for me to build a case for not buying it.
Correct.
Because I'd basically be watching my Turkish dollars, whatever they are, go backwards and lose their purchasing power. But this is happening in New Zealand over the last 25 years. I think the purchasing power has decreased by 47% or something like that, right? It might even be higher.
Yep.
But we don't think about it because we just, we don't understand that piece to start with, but we probably don't have enough volatility or serious risk in it. So then we're so risk averse to look at something like this, or maybe inherently we do understand it and we buy property instead.
Yeah, look, I think people's drivers for property, and I'm a bit older than you, I think people's drivers for property came about because of the 89 share crash, and that scared the bejesus out of people, and intergenerational wealth was wiped out for a lot of people. They had exposure to Goldcorp and these companies that shouldn't have been where they were, and we got some rules to sort that out. But they changed the rules around then to make stability a big thing, and so property got the conditions to get a whole generation into property were put in place, and now we're really stuck. Unwinding that is going to be a challenge, and it's not productive capital. That's the problem. Like, productive capital is you and I putting money into a business that's going to buy plant, invest in AI, invest in IP, whatever it is that's going to grow way ahead of the New Zealand GDP
rate. Yeah.
And that's what we want, because we want to be exporting those kind of businesses.
Yeah.
And there are, if you can spend some time, just have a look. the average employee at Apple brings in, per employee, it's something ridiculous like $20 million.
Yeah.
Per employee.
Wow.
And we're still talking about milk powders, and so we've got to make that step change into less frictionless things that we can export to the world and make this country wealthy at the same time, right?
Well, even I'll just take you through this. This is what I've been thinking about recently, because I'm going to try and do maybe half an hour podcast unpacking this, just to give people some insight as to what the journey you go on. But I'm now in the top tax bracket, right? So I quite comfortably earn $180,000 a year from my accounting business, and so if I work on the weekend, for any new client I take on, for any new project I want to do with somebody and charge them, might pick up a speaking gig. I'm only really getting 60% of that, because 40% goes straight to tax. Now, I keep pushing because I love it, but what is, like, this is a transition I'm going through, like thinking about this and understanding this, because then I've got people like, mate, you're a fucking idiot. Don't work as hard and just get some rental properties. They're going to run at like a break-even loss, but if those drift up over time in value, you can borrow against them. You don't have to do the work. You don't have to go do the speaking gig. You don't have to take the new client on. You don't have to do that project. You don't need to help that person. Don't worry about that. Just do that over there. And as long as you hold the property long enough too, there's no tax on that.
Yep.
You can always go back to the bank and say, hey, I need a bit more money now. My properties, I've got 5 of them. They've all gone up in value. Can I please have an extra 30 grand? Oh, yep, here you go, as long as you can service it. Yep, I can still service it from my income over here, plus the rents that I'll continue to push up.
Yep.
And I don't have to work hard for that income. But over here, I've got to go do the work, do it, and then go, right, here's 40% of it pushed off to the side.
Yeah, it's hard, right?
So I've been thinking about this, I'm like, I wonder what that figure is that you then go, you know what, that's not worth it. Because there are some things that I say no to, because I go, that's just, I don't really want to do it, because I've had to go through a journey of being like, okay, what work am I going to say yes to? It's got to be impactful. It's got to be fulfilling.
Yep.
Otherwise, it doesn't really matter, because I'm only going to get 60% of it, not the hundy anyway. And even people who are earning above 78,000 are going to get taxed at 33.
Yep.
And you wonder, like, if we continue to tax work and then just ignore that over there, like, what action do we create? Well, you do get people go, and I've seen students who come out and end up working with massive student loans in the health space. Well, by the time they pay 33% tax, then they might get into that top. But even at 33, then they've got to pay a 12% back of their student loan on top of that too. So their effective tax rate's 45%. So when someone says, oh, can you do the night shift tonight? They go,
No.
I don't know if I can be bothered, man, because I got abused last time. I get shit sleep and I only get 55% for it. You know what? Like, nah.
Why would I do it?
Yeah.
Yeah, and look, that's the bit that's desperately frustrating and sad for me. I think it's Bernard Hickey out there famously saying New Zealand is like a housing market with an economy appended on. And very extreme and but kind of poignant at the same time. And that's the bit where somehow we've got to flip that stuff where we're investing in productivity in companies that are making a change. And livening up the NZX and all of that sort of stuff has to come around, because we've got to build an economy that's based around the future, not around the past. And I just don't think we've made that kind of leap yet. And it's desperately hard, right? And I'll talk about my situation. My partner and I, nearly 25 years ago, let's buy a house. We got a house, and then there was like, let's get into the rental property game, because everyone was kind of doing it in those times. But we didn't have the cash flow, so we started we bought a business instead of using the equity off the house, because there's the other trip with the housing Ponzi scheme. And then kind of never got into the housing bit. And so over the years, we've owned 7 or 8 small businesses, probably employed 300 or 400 people over that time.
Wow.
And don't have a second house.
Yeah.
And consistently look back and go, shit, it would have been so much easier in 05, 06 to just buy a house.
And that's the sad thing, is that's the word, right? Easier.
Yeah.
Like, it's easier for me to get the 5 rentals, and I can go and do that tomorrow, but I'm like, I can't be bothered. Like, it doesn't interest me, so I'm going to keep working hard over here. But yeah, you're right. Like, we're incentivizing people towards easier, and now we've got to pay the price for it.
But the overhang, this is the bit that worries me about the housing story. So I don't have any facts to back this up, but I'm led to believe predominantly owned by the older generation, which is, good for them. But there's a lot more of the older generation now than there is of the younger generation. That's just dynamics. What happens when those older generations go, you know what, I'm out, I want to retire, and they start selling all of their houses?
Yeah.
To who? There's no one to buy it. Like the supply and demand dynamics are about to look really ugly, in my opinion. I'm just looking at, and it might be I've completely misunderstood that.
Yeah.
But if you read what was in the budget, the pretty uninspiring budget, like we've got a problem around superannuation, and there's a lot more of those going, and something like 30% of the population is currently in the retired bucket, and it's going to get up to 45%. If you believe that they're the asset owners, and they're going to be selling to my children, it's like, well, how are they going to afford it?
Yeah.
At what level? Like, there's just this unanswered thing in my mind. I'm like, what does that mean?
And also, your children are now having to not only just pay for the house, but they've effectively got to pay for their car, their boat, their financing of their holidays along the way, because we've created more debt via pushing the house price up.
Yeah.
And so now the person coming in after is like, well, the utility of that property is not worth the true
lifestyle.
But the price of this. So what I'm now paying for is actually your lifestyle that you had, and I've got to pay for it because you could use this asset to take on more debt that was untaxed, and the whole thing worked magically.
Yeah. And I can tell you what they're doing, because they're doing it at my house. They're not moving out.
Yeah.
Like, why would we?
No. And like probably a lot of them will be thinking, well, I can't. And that will just become normal.
That's part of it as well.
I guess you just have to flood the country full of more immigration maybe, or...
Well, that's the level that governments have pulled, right? So that's how they're supplying demand to the housing stock, is by immigration.
Yeah.
But it's at the price of our own children who are leaving, right?
But if you have a country that's not doing so great economically, and there are better opportunities, so let's say Australia, and you go to someone who wants to move here, like, are you sure? Because you could go over there. Like, oh, okay. So if we can't build that back, and then you have boomers selling because they need to have extra liquidity to do the things they want in their life or get into the rest home, that comes onto the market too. And then you have AI going, well, actually, we've got pre-built properties that we can spin up over a year, and actually, okay, the RMA says we can't access the land. Great, we'll build 100,000 sky high. We've got 68 stories now, because we don't think those things are possible, but someone sent me a photo the other day on the 68-story in Melbourne.
Yeah.
Like, that's just like, whoa, that's mind-blowing. But in Melbourne, that's probably, okay.
Yeah.
But, we can still do that. And it's like, land's always scarce. Yeah, but the air's not. So there's all of this pressure coming to suggest that maybe property doesn't continue to do what it has always done. But I guess there's so much vested interest in that continuing to happen that maybe the cycle just does repeat, because it has to keep people happy. I don't know.
Well, I think that's the dilemma for politicians, let's be honest. Like, if they unraveled housing really fast, they're not going to be very popular.
Yeah. You're not going to get in, are you?
Yeah.
No.
But that suggests that it probably needs to be slowly unraveled rather than all at once, which, markets either do one or the other. So pick one.
I'll tell you a good story that I did see, and I think for those who, aren't getting into property, they are looking for something that they can buy, so that they can protect their dollar. If we go back to Turkish lira, is it? Yeah. And the like, right? And even the New Zealand dollar losing value with inflation. And I saw someone talking about how basically every pay they would, pay their kind of main bills that they have to pay via NZD, and they'll put the rest into Bitcoin, and that was the vehicle that they chose.
Yep.
Now, then they would spend down on that if they had coffees or activities and whatnot, but then they would just rinse and repeat next payday, same again. So it sort of forced them to dollar cost average in.
Yep.
But in that time, their leftover that they didn't spend has just continued to grow and grow and grow. And so it's completely changed the way that they look at their life. Plus, they've then gone, well, I don't want to spend as much because I know how much it could be worth in a year's time. So then they're like double cautious with, do I want that extra round? Do I really need those fancy golf clubs? Do I get the third shoot, or the second the second pair of shoes at Hannah's a half price?
Yep.
You came for one, do you need two?
Yep.
Same with the sunglasses. Like, oh, I don't need 2 pairs of sunglasses, maybe just one. So all these decisions start to become different. And I think, you could replace Bitcoin with the S&P 500 there.
Yep.
Where some people have sort of done the same thing. Like I met a young fella and he accepted there could be volatility with the S&P 500, but he was like, well, if there is, then I'll just have to wait longer till I can buy my property. But to get into his first home, he just continued to pour everything into the S&P, and that just dragged up over a good couple of years massively.
Yep.
And sped up the journey to get into the property.
Yeah, look, and that's an investor's goal, is to grow your aggregate assets at faster than the market. That's the whole point. And so if you can create a portfolio or a bundle or whatever language you want of assets that are have those kind of characteristics, then do that. It's exactly a great idea to do. And at the same time, control your spending. I've got a teenage daughter who's of the opinion that money grows from me, right? Yeah. And I'm like, control your spending. And she's kind of an anathema to her. She's like, what? How does this work?
Yeah.
So it's a big part of learning around this journey. And so it's not just, because everyone knows that at the moment you get a big pay rise, you go, and guess what you do?
Change your lifestyle.
You change your lifestyle, right?
Yeah.
If you can maintain your lifestyle at your previous salary, that's a step change. And there are, some really cool tools, people who kind of do that deliberately and consciously and go, if I got a $15,000 pay rise, I'm going to, after tax, I'm going to bank all of that gain or pay off my mortgage with all of that gain or whatever they're doing with all of that gain. It's a disciplined approach, but it works mentally because they're like, I could live on the previous salary. We were paying our bills and doing all of those things and had coffees and, golf memberships or whatever it was. They had it. So what changed?
And there'll always be another way to spend the money, right? Like I've told the story recently, but I was on an island in Fiji, and to start with, that was expensive. But get this as well, you have to pay by a card to get out of there. So then there's 3% transaction fees on top of that. So it's like my holiday's 3% more expensive because this is the only way you can pay. I was like, can I do a bank transfer? Like, no. Okay. Anyway, there's a speedboat direct to the island, but that costs more, right? So we stick to the ferry. I'm on the ferry. I'm like, fuck, should have got the speedboat, man. This is punishing, stopping at all these different islands. I'm like, maybe next time. And then get there and it's like, oh, someone just chop it in. I'm like, oh, okay. What did the chopper cost? And I'm like, maybe we could get the chopper. Then I'm like, ugh, do I really need, is that worth the... And then I'm looking out at this island in front of me, and I'm looking at the side and I'm thinking, shit, it's pretty random. It's really tiny. It just seems to have this old kind of batch on it. I Google it. It's like, oh, Larry Page brought this one during COVID. Brought the whole island. You're like, oh, plus 3 others, and had to get one of the other ones because that's where he could take a super yacht into, but not all of the islands you can or something. You're just like, man, there is, you'll never be done in life because there is always something else that you could purchase if the income is there. And I think we just assume that, that the rich people don't think like that or don't have to, but they can buy islands, they can buy yachts, and you've got to clean them, then you've got to bloody hire people to run them and whatnot. So getting your spending in check and being content and being deliberate with your value of your spend, I think is such a important lesson, but we've failed to teach people in different stories and ways to encourage them to really think for themselves, like, okay, when's enough?
Yep. And that's a perennial question. I'm older than you, I'm still asking that question.
Yeah.
I think the other thing that I don't know if we really fully appreciate, but some of the biggest businesses on the planet, Facebook, Meta, Google, they're built to make us buy things.
Exactly.
I went to university, studied marketing. Marketing is designed to get people to buy things.
Yeah.
Like the economy that we work in is predicated on people, half the people selling stuff and half the people buying stuff. That's just how it works. And you can make a choice there in that regard to go, I'm not going to, I've got a 4-year-old iPhone. Do I need one? The new one? No, but the new one's got,
AI too.
Like I get it, but it's not changing my life. Like it's not like the moment I first picked up an iPhone. That was ridiculous.
Yeah.
They're all just incremental changes. So really, do I need to upgrade? And you have ask yourself those questions. Do you need a new car? Do you need whatever it is?
Yeah.
So everyone goes through those journeys, but just recognize that our whole existence is pretty much on the edge of people selling us stuff.
Yeah.
You walk down the street, you're seeing sale signs. You're online doing searches. It's all marketing. All the ads being served on every social media platform. Like, it's all marketing.
Yeah.
Designed to extract your money from you.
Well, the way I look at it as well, and I've been explaining this recently, is there's 2 million individual credit cards. Okay, there's 940,000 people using buy now, pay later services. It doesn't even feel like that's that old, buy now, pay later stuff, right?
Right.
And 42% of those people have multiple, like, afterpay, buy now, pay later type services. But then the questions that you'll get, or actually I've missed the point here, but then if you take a share platform, like, they might have hundreds of thousands of customers, but they don't have 940. I'd imagine you guys don't have 940,000 customers.
Correct.
But the question you'll get is like, oh, where do I start? How do I buy it? What do I know to buy? But it's crazy how marketing has been so good to be like, hey, 2 million of you should get a credit card. And you know exactly how to do it and why you do it. And most people are tribal. They're credit card influencers. Oh, best thing, and free travel insurance. Like, why do you think it's travel insurance and not pet or home or whatever? But, how did 940,000 of us get convinced that we knew exactly how to sign up to afterpay, buy now, pay later? But when it comes to investing, it's like, don't know, not sure where to start.
Feels a bit hard.
Yeah. Interesting, eh?
Change my life? No, I don't want to do that.
Yeah. So there's got to be a delayed gratification element in there, maybe, or a fear of losing the money versus when you spend it, it's like, well, you think that you can make it back, so that's why you go into debt, because if your income stopped the next day, then you're in the shit.
Yeah. And I think it comes down to what people think is going to make them happy as well.
Yeah, true.
I would love a new set of golf clubs, but it's not going to make me a better golfer. My friends are going to laugh at that one. But, I think it will.
Hey, if anyone's got a golf store out there, get in touch with Paul. Sounds like he's ready to buy.
Yeah. But it's, again, it's me, right? And so what will make me happy? You need to answer that yourself.
Yeah.
But things generally, for me, it's experiences. Like, if you catch that sunset, if you have that holiday, if you do whatever with your family, those are the things that you really remember about. You don't remember, when you bought your last iPhone. I don't.
No.
It was pretty exciting on the day. The whole unboxing experience is fantastic, but I can't remember when I did it.
Yeah. I remember when I got my last one, but only because the next day, after I said to them, no, I don't need a shield protector on the phone.
Good story coming up here. Yeah.
I dropped it and scratched the screen. I'm like, oh, far out. How does this always happen?
Yeah.
I had, I think it was Spark actually, which you'd be familiar with, obviously, mate. I had the old iPhone insurance, and I think I used it so much they were like, sorry, mate.
You're done.
You're done. So I couldn't get it anymore.
You're the guy.
Yeah.
Yep.
The card, I saw the card. Speaking of innovation and technology and whatnot, I saw a card recently where basically you can put your crypto onto it and then spend on that, just like any debit and credit card, whatnot. And you don't even need the plastic. You could just have it bolted straight onto your phone, I saw.
Yeah. So I believe that came out from a good little company down in Christchurch called Pay It Now.
Okay.
Who are a partner with us. And
so again, innovation, New Zealand-based company building that. Wow.
Yeah, exactly. And it is just to be very clear, it's not a credit card, it's a prepaid debit card. So I'm not sure exact model, but in traditional crypto terms, you top it up with whatever asset you want, and then you spend down, and when you run out, you got to top it up. And so it's just a way of kind of answering that, well, what do I do with my crypto question? Well, it's like, you can spend it at anywhere MasterCard's accepted, which is everywhere in New Zealand, let's be honest. So, it's a pretty cool innovation. And there are some other people who are working on various different elements, different ways of doing that, where you can actually get a credit card and you pay off your balance with your crypto as well.
Oh, okay.
Which would be, kind of cool at the same time.
Yeah.
So,
things are happening.
Yeah, and there's this particular type of crypto asset called a stablecoin, which is basically a digital representation of dollars. They came out of the US. We've got one in New Zealand dollars. And, those are a very exciting part of the crypto ecosystem. Not only are people using it to maintain their balances on their cards and their pre-K, but they're programmable. They're programmable money. And we're now in a world, we just talked about AI, where AIs want programmable money and they can't get it in traditional sense. So, the future is really bright for that sector. So you can suddenly have smart contracts, which are the programmable bit, telling your dollars what to do. So, when you've completed your latest speaking gig, did you complete it on time? Yep, boom, gets paid.
Yeah.
There's no one in the middle there saying, invoice Luke, and, all that sort of stuff. It will just happen. That's the future of that kind of stuff coming together.
Oh, right.
And AIs will do that, right?
Yeah, and that's just going to speed up velocity of money, which then grows in the economy. Yeah.
Yeah.
Wow.
Exciting times, right?
Yeah. Okay. Mate, I feel like we could talk for hours, but I do know that you have an 11 o'clock meeting. There's the Easy Crypto Knowledge Hub, if people want to dive into that to learn more.
Yeah.
Just before I let you go, are there any big themes that you're seeing that we haven't touched on today? Whether it's, one thing I did want to ask too, are you getting, Craig's, JB Weir, are they going hey, you know what, we've been a bit slow to try and understand what's going on over here, but they must be managing hundreds of thousands of boomers' money around the country, and some of them must be starting to ask those big institutes hey, where's my exposure to this? Hey, do I need 2 or 3%? Are you getting any of that? Is that happening?
Not from those guys, but we even put an article out about this. We're seeing people who are literally bypassing their financial advisors and saying, well, you're not there. I've sat down with you for 45 minutes. You told me about all that sort of stuff. The conversation normally goes, have you got any Bitcoin? They go, yeah, I've got some. Well, can I buy it through you? No. So people, we're getting high net worths, positioning their portfolio, I guess is how I would view it, into, owning their assets. So that's how that's coming about at the moment. And then there are, share trading platforms where you can get exposure to the ETFs, and NZX has launched its own. So we're seeing that sort of stuff. And then the other big trend which is going on in our space, it's got its own name. It's called real world assets. But basically you're seeing big businesses tokenize access to government bonds, or in the US, government treasuries, which are traditionally only available to the really big guys, the big institutions. But suddenly, money market funds and all of that sort of stuff, which are low risk, are available in a tokenized form via these platforms. And so people are doing that with gold, people are doing it with real estate, and now they're doing it with, bonds and treasuries, which is a pretty cool thing. And it means that, everyday investors, which is, part of our drive, is to get investment tools into as many people's hands as possible, suddenly have exposure to, stable, risk-free returns on really trustworthy underlying assets. And so the blockchains and the crypto part of that is coming together with those, trustworthy assets, and that's a big growth part of the ecosystem. And when I say the big guys, I mean BlackRock, which is the biggest of the big guys.
Yeah, wow.
They're doing it and have been doing it now for about 8 months and doing quite successfully.
See, one question that I started asking myself that changed my life was basically, if they can make sense of it, how come I can't?
Yeah, right.
Yeah, so
Nice question. Yeah,
if you've got a Saudi fund willing to drop 400 million in, and I'm going I don't know, is it a good idea? I stop asking myself that shit. I'm like, how do they think it's a good idea?
Yeah.
What do they know that I don't? And it really helped me sort of just take the pressure off myself of trying to get everything right, but also just be more curious to, okay, this isn't just me. I'm not the only dude doing something.
Yep.
There's other people making sense of it, whether it's a business or investing or whatever, or a type of thing to eat. Yeah.
But honestly, they've all got some sort of disclosure. Read it. And then typically it's a decorrelated asset. That means when, one's going up, this is going down, and when this one's going up, they're all going down. It's got a Sharpe ratio. If you don't know what that is, Google it. It is basically the risk, is it worth the risk of investing? And Bitcoin has a Sharpe ratio 1 to 2 to 4. Anything over 1 is good, right? If it's 4, it's golden, right? And so there's another part. So decorrelated, good Sharpe ratio, and it's readily available. It's you just have to do the KY, know your customer sign up process, and you can own the same asset as the biggest guys on the planet.
Yeah.
Think about that.
Even to give you another example, just on that, when the S&P got smashed the other day and it was peak volatility, and people were asking is it a good time to buy? Mm-hmm. I learned enough by this stage to be okay, yes, when there's blood in the streets, it probably is. Maybe it comes back.
Yeah.
But so I deploy 10 grand, I think, and the question I ask myself is, are you comfortable never seeing that 10 grand again? Mm-hmm. Because that's actually the question, not is this a good time to buy? Yep. My risk is still the same. I don't know. There could be World War 2 days after, and it's now that I've got that information, no, it wasn't a good time to buy, right? But I'm like, well, yes, because like, what's the likelihood this actually goes to 10 grand? Shit, I'd have to be unlucky. The whole S&P 500 has to go to zero. Like, okay, that seems really unlikely. Maybe a nuclear event.
Yep.
At that time, am I going to be worried about my 10 grand? Probably not. Like, when I start stepping through this in my head, I'm like, stop thinking, push buy.
Yep.
Like, done.
Yep.
And then I don't have to get caught in the weeds of like, oh, I don't know, should I wait till tomorrow? Oh, I might, I'm just like, send it and go.
For me, the one piece of follow up on that is have a plan. So, when you get to a level so if you're still a little bit, squirrely on the risk you've taken with your 10 grand, just have a plan. So if it doubles, I'm going to take out my 10 grand.
Yeah.
I'm going to let the other part ride, but I've recouped my principal. And as an investor, that means if something else comes along, people are marketing whiskey at me at the moment. Guess why? It's like, well, is whiskey a good investment? Maybe it is. If I do my research, I'm going to deploy in that. Or is it wine? Or is it whatever else, alternative, right? But just, have a think about it's not just when you get in, it's how you get out is an important thing. And when do you want to get out? You're a younger man than me, so you can think about time horizons that I can't.
Yes.
I'm going to be retired before you. So what does that mean, right? My profile is different from you.
And exactly, like people could hear me say that about my 10 grand to the S&P 500, but context to that, like I don't need that money for any time soon. But if I needed that money and it was part of my house deposit purchase, I wouldn't even be like playing with that. I'd be like, oh well, like no.
That's
like,
sacrosanct. I'm going for this purchase over here. Whatever asset it is. So, like again, like you have to. In anything, you've got to do a little bit of work. You've got to do a little bit of work and research and have your own little plan.
Yeah.
And for some people, it could be, I'm just going to have KiwiSaver. And that's fantastic. Like I think that is way better than nothing. But if you have more discretionary money, that is the leftovers, have a think about, can you get a better return than what you're getting on those? And even, not all KiwiSavers are equal either, as you've probably done pods on, right? So, maybe you need to have a think about which one of those you're in as well. Just don't be so passive about it is the whole thing.
Take some action, do some learning. There's the Knowledge Hub there from Easy Crypto on the website. You can find it. It's a New Zealand-based company.
Yeah.
You guys have a newsletter that goes out every week. That's where I do some of my learning. Like I'm not deep in the space, but I'm like, okay, there's a gentle nudge and I'll flick through it and go, I didn't know about that. Oh, shit, there's a card. Oh, so there's people like, oh, you can't spend your Bitcoin. I'm like, oh, it looks like you can. So I'm like, great. Park their knowledge. And I can come back and learn more about that if I need to. But I think that's a great thing about KiwiSaver schemes and investment platforms is that they are planting seeds for people to learn more along the journey as well. Whereas credit cards, buy now, pay laters, etc., are normally just like, here's another sale. Did you know you could have some more credit? Oh, we've got a buy now, pay later day coming up. And so it's basically just more marketing to hand your money over. Whereas you guys basically have to educate people like, here's the world that we're in. Here's the volatility. Look at the greed. Oh shit, heavy greed. Think about that. And here's new products that are coming online. Here's the top buyers and stuff like that. And so you're actually like learning, not just being like, okay, I'm going to give my money over to another massive retailer or a credit facility.
Yeah, well, it's a choice, right? And you should be conscious about your choices, I guess is what we're trying to say here.
We hope so. Well, mate, we like I say, you got to go to this meeting at 11. It's 10:57. We probably lost 20 minutes talking about the New Zealand property market, but I think it's important. We'll have you back again in maybe 6 or 12 months, mate, and see what's happening. But thank you for your time.
Oh, well, thank you again for having me. It's always a pleasure.